Let's go ahead and learn about moving averages or dynamic support and resistance. Moving averages are the most commonly used indicators in technical analysis. You will find them in any charting software, whether paid or free. Moving averages act as an excellent support and resistance zones. Often you will find prices respecting moving averages. In technical analysis, there are many different variations of moving averages like simple moving average, exponential moving average, weighted moving average, or displaced moving average. Though they differ in name and the calculations, but the manner in which they are interpreted is mostly the same. For our current tutorial, we will mainly focus on simple moving average and exponential moving average as they are the most widely used indicators. Let's go ahead. I'll give you a brief introduction of what is a moving average just in case you're not aware of it and walk you through of how it is calculated. Although we will not go in much depth of calculations, still it's better to have a rough idea. A moving average is average price of a certain number of price bars. Mostly a close of a price bar is used to calculate moving average, but a moving average can be calculated using any price factor like high, low, close, etc. A 20-period simple moving average is calculated by adding close price of recent 20 bars and dividing them by 20. Similarly, a 50-period moving average will be calculated by adding close prices of recent 50 bars dividing them by 50. Whatever the figure comes, that figure is plotted below the recent bar. Once these figures are plotted over a number of bars, you will see them forming a continuous line. Hence, a moving average looks like a line plotted on a bar chart. Let's go ahead and see what are the common price settings used to calculate moving average. Or what are the most commonly used moving averages? For short-term trades or trades that are no more than 2 or 3 days in length, people most oftenly use 9-period moving averages. For intermediate term trades, people use 20 and 50-period moving averages. 100-day moving average and 200-day moving average are used for long-term or investment trades. Let's go ahead, take a look at an example. Following is an HDFC Bank chart. It's a daily chart covering data from the month of August 2004 to November 2014. The pink colored line is a 20-day moving average of close. Alright, MA stands for simple moving average. If you are plotting an exponential moving average, it will be plotted as EMA, exponential moving average. Similarly, a displaced moving average will be plotted as DMA. No matter what the name, the interpretation is almost similar. Compare this pink colored line with the bars or price chart. You can see that a lot of places prices have found support around these pink colored lines. Here you can see it went up, crossed the pink colored line, came down, found support at pink colored line, went up, came down again, found support, went up, came down, found support, went up, came down, found support, up, down, support, broke to a new high, went sideways, made a new high, reacted down, could not penetrate its 20-day moving average, went up to make a new high, came down, failed to penetrate 20-day average, and then went ahead to make a new high. Thus you can see prices respected the levels of 20-day moving average. 20-day moving average will also help you understand, or they will also help you identify strong trending markets, as 20-day moving average moves very close to price charts or very close to price bars. They will often help you identify strongly trending markets, as is the case of HDFC Bank. Going ahead, this is chart of Hornet stock. This is a stock traded on NSE exchange. The white colored line is a 50-day simple moving average of close. You can see here this simple moving average is plotted as a continuous line. Alright, since it's a 50-day moving average, it is a bit less flexible as compared to a 20-day moving average, as it considers a larger set of data to calculate its own value. Nonetheless, you can see how Hornet has respected the level of 50-day moving average, came down, found support, went up, went sideways, came down, found support, continued to go sideways, made a new high, reacted, came down but found support at 50 simple average, came down, again found support, and then on this bar finally it made a new high of 5,800, went sideways for 2 weeks or so, and then it's finally broke out to a new high. Thus you can see how this stock found consistent support at its 50-day moving average.